let's just start with the decision here and the opportunity that you see. What is the opportunity in the kind of distressed credit space for you?
Hey, thanks for having me. Well, we think that when credits really blow out to this level, this is probably a good time to put capital to work. And for our part, we're happy to announce this because it's really the first in many partnerships we're looking forward to announcing and really building our new credit program from about $3 billion of AUM to about $8 billion in the next couple of years.
And why Apollo this time around? Because, of course, we know that there's Oaktree, Blackstone, all of them looking into distressed investments and raising capital at the same time.
Well, I think luck favors the prepared here. We've had some time to do some pretty deep diligence on the segments and sectors, as well as the partners and their reach. We think this product in particular is a good fit for the strategy that we need here, which is really looking at dislocated credit, usually high-quality credit. We're able to move pretty quickly here in about a month's time, so happy to have been able to do that. Doesn't preclude us from other important partnerships down the track. We're going to be getting into other segments like corporate credits, off-balance sheet financing, royalties, even further distressed and special sits segments. So I think this is more the beginning than the end of the program, but Apollo is a great start.
And do you have a geography in mind, Christian, or does Apollo have a global mandate here?
They do have a global mandate here. We think the developed markets really are the place to be right now. Many of our legacy assets were more Canada-focused, but given where the markets are these days, we want to make sure we don't miss any opportunities or leave any stones unturned. So we'll be focused North America and Western Europe for the most part.
Where do you see the biggest opportunities? Because you, of course, have recently launched that global credit program. So what kind of partners are you looking for in order to enhance the opportunities for your clients?
Well, I think we're looking for partners overall that have the same sensibility, the same long-term horizon that we've got. I think the willingness to make things a two-way street. So we do want to make sure that partnership works both ways. But more importantly, we want to leverage those partners with really strong distribution and origination networks, good underwriting skills and deep background there, and who can work with us for the long time, a long duration really to build out the program we're hoping to build.
There is an awful lot of cash in the world, as you know, Christian, and much of it is now focused on this part of the market. How do you make sure in this very crowded space, and I guess we should add in the fact that you even have kind of government competition in some places, how do you make sure you're getting the value here?
Well, I think we really rely on that deep fundamental underwriting and security selection to create value here. I think you are right that there is plenty of capital chasing quite a few of these ideas. I think luckily the addressable market is really pretty significant, but having partners and having the ability to be in deep with specific companies in subsectors that you've come to know over long periods of time, that differentiated insight is going to let you find those really rare opportunities in the big churning markets that we're experiencing right now.
And we have heard that IMCOs plans to boost assets under management. What's the target right now?
Well, I think generally, look, our purpose overall is to help consolidate what is still a fragmented space in Ontario. We do have ambition, but of course, joining us is voluntary. So our job really is to create a very flexible platform that can accommodate a wide range of different asset and liability profiles, even tax status of the different pools of capital we're hoping can join us. I think the ambition would be to certainly get us over $100 billion of AUM in the coming years.
This is obviously a crisis without precedent, Christian, but we've seen many, many big funds, including, some big pension-related funds, make big bets that have gone bad and make overly volatile plays. How do you reassure your investors that despite the fact you want to take opportunities here, you won't increase the volatility of your fund?
Yeah, I think at the core, we can't lose sight of the fact that every day our job is to make sure we're able to put groceries on the table or pay rent for our pensioners. So nobody in our shop wants to be out there being a hero. I think staying humble, asking ourselves, are we good at this, making sure we're accountable, and really going with what's steady, predictable, well-structured, well thought out, and staying disciplined. Those are the real principles that we really embrace so we can go out there and ultimately deliver for our stakeholders.